Hello guys! Welcome to Bitcoin News and Crypto. Today is February 20th, 2026. The crypto market is tense, but very much alive. Coin is trading in the $66,000 to $67,000 range after rebounding from recent lows near $65,000. Volatility is rising. Sentiment remains cautious. And the entire crypto market sits near $2.4 trillion. Fear is elevated. Momentum is undecided. But historically, this is where major pivots begin. Today, we break down what's real, what's noise, and what levels actually matter next. Let's get into it. Bitcoin currently trades around $66,000 to $67,000, holding above the $65,000 support zone that traders have been watching closely. Total crypto market capitalization stands near $2.4 trillion. Bitcoin dominance remains in the mid-50% range, showing that capital is still favoring BTC over altcoins during this period of uncertainty. Ethereum trades just under $2,000, consolidating after recent pressure. Open interest across crypto derivatives remains elevated, signaling that leverage is still active in the system, but not at extreme levels seen during prior tops. ETF flows have been mixed. Some days show outflows, others modest inflows. The narrative of massive institutional flight simply isn't supported by consistent data right now. What we're seeing instead is hesitation, not abandonment. Funding rates have normalized after recent volatility spikes. Options markets show elevated implied volatility, reflecting uncertainty but not panic. Let's talk about what actually matters. First, technical structure. Bitcoin continues trading below the 72,000 resistance zone. This level has acted as a ceiling multiple times. A confirmed break and sustained move above 72,000 would signal a shift back toward bullish continuation. On the downside, 65,000 remains key support. A clean break below could open the door toward the psychological 60,000 level, where buyers have historically stepped in. Second, macro environment. Markets are watching upcoming U.S. inflation data and Federal Reserve commentary closely. Risk assets, including crypto, remain sensitive to liquidity conditions. Any signal that rate cuts are delayed could pressure Bitcoin short-term. Conversely, softer inflation data could provide relief. Third, Ethereum and infrastructure. Ethereum continues incremental upgrades, improving efficiency and scalability. It's no confirmed quantum-proof overhaul, but steady progress on network performance and rollup adoption continues. Institutional positioning in ETH products has been balanced, not extreme rotation. Fourth, tokenized real-world assets. Tokenization continues expanding across Ethereum, Arbitrum, and Solana ecosystems. While not exploding overnight, the sector shows steady growth. Major financial players continue pilot programs involving tokenized treasuries and real-world yield products. Fifth, mining. Recent network adjustments have actually reduced mining difficulty slightly, easing pressure on miners after recent volatility. This suggests stabilization rather than stress escalation. Overall, innovation continues, but without the dramatic narratives circulating online. So what does this mean? Bitcoin is currently in a corrective phase, roughly 15 to 20% off recent highs. Historically, corrections of this magnitude occur even in strong bull cycles. Extreme sentiment readings often appear near local bottoms, but they are not guarantees. What matters is structure. Above 72,000, momentum shifts bullish. Below 65,000, caution increases toward 60,000. The market is not euphoric. It's not collapsing. It's compressing. And compression precedes expansion. Today's takeaway: crypto sits at a decision point. Bitcoin holds support. Resistance looms overhead. Macro data approaches. This is not the end. This is a test. If you value real data over hype, like the video. Comment ready if you're positioned. Comment levels if you're watching 72 and 65,000. Subscribe for daily fact-based crypto breakdowns. See you tomorrow.